This is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. All right, we are live. Let's go. All right, Wednesday. Don't you just love Wednesdays now? Wednesdays are the day that I look forward to of the week because we get to do this every Wednesday, talk about everything. Well, today we have on tap, we need to talk about Ethereum. We've kind of been watching Bitcoin so closely that a lot of things have been happening in Ethereum that we've sort of missed. So let's really dig deep and get down into Ethereum's price action. First of all, Ethereum has had the same sort of kind of reaction that Bitcoin did. So Bitcoin had a kind of a bull market run, and then a pivot down, and then we had a second top, and then we've been in this kind of downward move. Ethereum here is a little different. In fact, maybe I'll just put both of them on screen just so you can see the similarities and differences. So see how Ethereum was much like very high. Bitcoin was flattening out and Ethereum was still running, and then it fell really hard. This was closer to more of a blow off top. Ethereum kind of rolled over on the first round. And then we kind of found our footing again down here. Ethereum never made it to a red zone. So we were never below, there was never a cross of the 100 below the 200. So the chart actually maintained a ton of structure where there was so much time on Bitcoin that things kind of unwound. We had our 200 on top, followed by our 100, then 50, then price action. And the 50 and 100 were both sloping down. So we had a red zone on Bitcoin where we didn't on Ethereum. Well, the second move was flatter. So we kind of rolled over on Ethereum up here. You can see how Bitcoin was much cleaner with green to yellow, and we were kind of out for the rest of the season. Where on Ethereum we were green, yellow, green, yellow, green, yellow, green, and it finally petered out, and then we had this full move. But apart from those differences, we've been pretty much following the same trend. Most of the sudden moves were similar. The main difference was the bottoms. Look at Ethereum right here. I'll zoom over. Let me do it this way so that they both go the same. See how our bottom on Ethereum, we had a nice low selling climax, and then we popped up. Now this was the kind of leading into the merge happening, and the merge happened right in here. And Bitcoin didn't quite get that, so there was not a bunch of moving here. But when we had the FTX drop, Bitcoin dropped lower than our selling climax over here. Blue Sky, welcome to the stream. I appreciate you guys chatting and let me know that this is working. All right, so on FTX on Bitcoin, Bitcoin, we dropped below our low and we traded in a lower range. Ethereum did not. The cycle low for Ethereum happened on June 18th, period. Bitcoin, we've been wondering where the bottom is. Is it in? Is it not in? Oh, it's not in. FTX just happened. Oh, then what was this crap here? Like we got a slightly lower low. It was the weakest low I've ever seen. So this was just confusing. This was such a mess. But on Ethereum, we had a sweet selling climax, a complete signal that bears got to get everything out of their system. Even though there was a bit of a fake out and even an FTX black swan, we never revisited these lows. So Ethereum is behaving quite a lot more similar to all of the prior cycles that Bitcoin has seen. So you can tell that maybe Ethereum is painting a different picture. Maybe maybe the development stage of Ethereum matches the development stage of Bitcoin last cycle and the cycle before. So these are all really positive things. But with that information, let's take a look at Ethereum and really kind of look at this. So as I had tweeted out recently, we have a high, lower high, lower high, lower high, lower high, lower high, lower high. We have a candle close here. This is a higher high. We have changed momentum. There's no question about it. I don't care. I don't care if you've got a PhD or if you're a second grader. Anybody can see that we have a close higher than this. And this is a complete shift. Now, does this mean we just go straight up? Like $5,000 Ethereum, here we come? No, it does not. Things take time, but they will get there slowly. I've got my pro channel asking me stuff. Cool. I wasn't sure if it was about this stream, if there was a problem or something. Okay, so we have a new high. Now let's kind of look at this from even a kind of more of a zoomed out scale. So we have this climax where we have a low. So how markets generally trend is you will generally find you'll find a low of some kind, and then you will create a higher high, higher highs, and higher lows. Higher highs, higher low. This is a higher high than this. This is a higher low than our low down here. And we kind of do this. This is how we kind of build momentum, and you can tell that we're just absolutely in a bull market. When you're trending upwards, you have new highs, and your lows never quite reach the prior lows. It's when you find a slip or a problem that you can tell that a change is happening. So this was a higher high, low, and then this one was slightly lower. So this is starting to go, now something's changing. Like this high should have been a higher high, and it wasn't. And we did get our higher low, but you can tell just from the flavor of this that there's a momentum shift happening. Here's our higher high, so okay, great, everything's fine. I'm confused. When this low happens and it's lower than this, you can tell that there's a shift in the air. Now, does that mean that we just completely dropped off? No. We came back, we even found a little bit more support, and we came up to a new high. But this new high was definitely lower than this. And you can see now we've gone from making higher highs to lower highs. And then we're watching our lows. Our low here is lower than this low. And then as we continue down, this low is lower than our prior low. And our market is completely changing. So here's our lower high, and we're continuing down. Well, for a long time, since June of last year, we put in a low, and we put in a lower high, sure, and we kept doing that, lower highs, but we did not get a lower low. So here we are in November. Things are really falling out pretty hard, but we have a higher low than we have had before. And we've been marching up. We've been watching this line very carefully on both Bitcoin and Ethereum, and we're watching to see if our higher lows stay true. Are these lows that we're hitting? Are they still rising? Well, at a certain point, your lows are going to rise to a certain point, and your lower highs are going to fall to a certain point, and you're going to find a pinch point. And we were smart enough to notice this line right here. At the top of this, and the top of this, and the top of this, we established 3 points on a line, and this defined our downward sloping momentum. When we popped above it here, we were like, sweet, this could be our momentum shift. But where did we top out? We topped out lower than our prior high. So we had a lower high. we had great momentum, and we definitely shifted momentum, but this is kind of the start of putting on the brakes. When you're going really fast on the freeway, you can't just slam on the brakes and get there. You kind of want to casually pump the pedal, pump that brake, and this is exactly what happened here. So we hit the brakes. We did not, our momentum has changed, but we're not fully out of the woods. So FTX comes along. I did not know this was going to happen. It definitely took me by surprise. And we dropped back below our resistance. Well, when we popped up above it, we were smart enough on this channel to call it out. And so we had all of these touches finding support on this declining resistance. And the last time we touched it was right here. This is where we drew our line. We drew it right here. So now our momentum has shifted. You can tell from the shape of the chart that things are changing. Things are leveling off. The downside is losing steam. The support is intact because we are climbing up. We've made progress on the support side. The resistance side, though, is getting choppy. We've definitely lost this line, and now we're heading sideways. Well, exiting the red zone is a big move, especially when you're down at this level. The cool thing is had we jumped the gun and entered at the exit of this red zone, the entrance would have been 1356, and the exit of the red zone here was 1256. It was $100 difference. So it wasn't that big of a deal. Anything in here is going to be a good trade, especially in the years to come. So we're looking at a yearly move. Like this is more than a year from this top all the way down to where we are today. This is more than a year, and the very clean downward sloping resistance happened since April, and here we are in January. So this is a solid 9 months declining resistance, and now we found it as support right here. This was such a pivotal moment. So this move here got us back up off the ground, and we had one more attempt to break, but we held. So we've held support on this line all the way up until we exited the red zone. And when we exit the red zone, there's a very tangible change. This creates momentum. Every time you exit a red zone, there's usually some kind of a push. Even if it's short-lived, there's something. And so these are positive. And so when we had this, I was rejoicing because I knew we had something on the table. And I also knew that our most recent lower high was right here, sitting at 1320. So we just needed to close at or above 1320, and suddenly a year of solid downside is much more tangibly broken. So this is getting really good, right? And I remember telling you before this closed, this candle right here, I said we will likely close at or above, probably at 1320, because that's where our resistance is. This is such a pivotal, monumental thing that it is almost it was just a very high likelihood that we would get right there. And so this candle closed at 1320 and 95 cents. This candle closed at 1320 and 44 cents. So literally 50 cents difference. And why would we be attracted magnetically to this level? It's because This is the one that all of the whales are watching. This is the people with money are watching levels like this. This is how smart money trades. So we are now looking at the same level here, and two things could happen, because when we close a candle on exactly on a specific level, we will either immediately pull back, and I would have expected a higher support, probably down in this range, and then we try again, or you start a new candle and you continue the move. So now, what are we looking for now that we've got this? So we have a complete change. We have a new high for the first time. Well, two things have to happen. We need to continue creating in higher lows. So if we lose, because these higher lows are so well defined, this line now represents a very, very, very pivotal support in the future. So if we come here and put in a new high, and then suddenly we break below this line, things are not going to be great. This would be rocky. If we got below this level here, it would be like this is all broken, and we're gonna have to kind of regroup and really reanalyze all of our prior notions. We're gonna have to definitely second guess where we think we're headed. So this is absolutely gold right here. This level, and this is the level, is 1190. If we were to close below 1190, something has broken, and that's not going to be pretty. So still, our risk reward is still very, very good. So I wouldn't be trying to overreact, to be honest. But this line is very important. This is now the slope of our increasing support. So if we get up here and we do well, we have to come back and we need to stay above this line, which we will most likely do. We have so many things going for us. We have the 50, which now the 50, look how awesome this is. It's sloping up so nicely, and I've said this quite a bit this last week, when our 50 is falling, it can push us down. When a 50 is rising, it can push us up. And most often when we've got momentum on our side where the 50 is rising, it will most likely push us up. I'm talking about greater than 50% chance. So we have our 50 so first of all, we've got our increasing support as support. We have our 50 coming up as support. We have our 20 that'll be weaker, but it is going to function as support most likely. And then we have our 100. We've broken above our 100, and it can be a level of support, depending on how long we stay up here. So we have officially one full day of staying above above our resistance line right here. One full day, and then we have another one that's about to close in 4 hours. So we're getting 2 candles. What we really want to see is anywhere from 7 to 14 days. We want to see a week or 2 weeks above this line before we come back to test it. If we can put in a decent amount of time above this resistance before we come down, it'll be that much stronger. We don't want to go straight up to the moon and go too fast, because then we're going to pay for it. The market will come back down. The market will be ugly. We'll have to oscillate. We'll have to regroup and find support and all of that. So there's kind of a method to all of this. So we want the market to move slowly, but yeah, these slow baby steps moving up are absolute. That's exactly a trader's dream. Like, this is exactly what we want to see. So hey, Local Liquid, nice to see you join in chat. So this is beautiful, I have to say. So all of us that are trading and looking for long-term entry points, after a selling climax, buying out of the red zone is a decent place, but we still had a lot of work to do to flatten out and get things. So this could have been a little presumptuous, a little too early. I actually did take this trade, and magically I sold right here at 2000. It was the absolute top, and it was sort of pure luck. I don't know. It was just one of those things where it's a very round number. And anyway, I got lucky. And then I didn't get so lucky on the FTX drop. So it all works itself out. But we read these and we're looking and we're planning and we're trying to think, how can we do this the right way? Well, what we're absolutely looking for from a long-term view is we are looking for giant momentum swings. If you're trying to trade every little zigzag on here, you're not going to make any money. The reason is that you're going to get faked out at some point, and then your short-term entries and exits are just going to get blown out of the water, and you'll just be stuck in a trade. I'm always looking for the long-term swings, big moves, and this is one. This is a yearly momentum shift. Plus, from the history that we know about Bitcoin and the crypto market, these markets usually work in 4 years. So the question is this momentum shift the start of the next 3 years of upside? Will this move culminate in the top of the bear market or bull market in 3 years? I'll tell you what, if we're starting to make decisions now, planning for 3 years from now, this could be one of the best opportunities that we'll see for many years. So we're just knee deep in here, and we're trying to be level-headed. Level-headed doesn't mean you can't get faked out, but level-headed means that when you get more information, you have to be ready to pivot either way. So if we close below this blue line, we're going to be really reanalyzing everything, and we're going to be really looking at everything very carefully. But the chance of us holding this line and having a new higher low and a new higher high now is way better, like way above 50%. I am absolutely loving this. This is phenomenal. So Ethereum is looking good. Just to kind of keep going down the rabbit hole on Ethereum, the cool thing that's happening with Ethereum is that the amount of inflation on Ethereum is it's negative right now. Well, this is the 1 day. Hang on, let me switch over. 5 minute, 1 hour, 1 day since merge. Okay, never mind. But yeah, so the total supply on Ethereum has gone up 2,000 Ethereum over the past 104 days. If I click this Bitcoin, we have added 106,000 Bitcoin since the merge, and Ethereum has added 2,000. So Ethereum has lower inflation than Bitcoin right now, and this is just new circulation coming online. We know that Bitcoin has 21 million as a maximum, but as miners mine them, and they will mine till 2148 or something, we still have another 100 years of mining. It's just going to be very small. But right now, when there are 6.25 Bitcoin coming online, into a miner's hands every 10 minutes, this adds up to be a 1.71% inflation per year. And Ethereum's sitting here at like 0.007. So Ethereum's becoming quite an ultimate hedge against inflation, and the utility is just unquestionable. There's a lot of reason that Ethereum could outperform Bitcoin, and we've seen it in the charts. It has done better so far, and I expect it to continue. So this is one that I'm very interested in. For long-term holding and for personal storage, Bitcoin is the number one. But for us traders that are looking for opportunities and looking for something that maybe higher return and whatever, there's nothing wrong with putting some into Ethereum. So this is pretty much the analysis on Ethereum. There are so many good things here. Let's switch over and talk about Bitcoin though, because Bitcoin is behind Ethereum. We have lower lows. The rejection that Bitcoin experienced off the 50 was similar to what Ethereum did. So we did do these same moves. We both exited. I think it was, so Ethereum exited on January 4th. Bitcoin exited January 4th. So there's a lot of similarities here. But what Ethereum has done that Bitcoin has not, Ethereum has crossed the 100 and we've put in a higher high than our most recent move. Bitcoin has not yet. And we have been watching this and talking about this for quite a long time. We're looking at 17,800. And this is our target for two reasons. Number one, this is the point that Bitcoin will now be able to point to, lower high, lower high, lower high, lower high, lower high, 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 down to here. This is Bitcoin's big chance to pivot. If we can get in a close at or above 17.8, we now have a case that this bear market is completely over. This would be a complete momentum shift. And we will, we can still have our volatility and go sideways and do whatever. I mean, Bitcoin has done this to us in prior bear markets. But we are watching very carefully to see if we can do that. If we reject now and head back down, the results of that will be that we're still waiting for a pivot. The new number that everyone's looking at is going to be here instead of here. But if it does, then we're going to have to hold the 50. We're going to have to hold this increasing support. And if any of this breaks apart or whatever, it's going to get a little dicey. So the two reasons why is that a lot of whales, a lot of people with money, all the smart money, they are watching for a shift also. And they're the ones to create these. They will create them too, because did this happen by accident that Ethereum closed at 13.20 and 95 cents? And then when we retested that same level, we closed at 13.20 and 44 cents. It's these things are manufactured by the people with a ton of money, and people who know how to manipulate charts and make money. Whales and people with tons of money, they're buying and they're creating the structure over long periods of time to get us to a place where the rest of the bandwagon will hop on and become exit liquidity for these people. So our job is to read the chart as well as the whales can, and we're thinking about markets in the way of what is smart money going to do next? That's how we're trading. The smart money is creating these charts. They're putting the money in the right place. Think about Alameda and those guys manipulating the tops and manipulating the bottoms. This exists, and we're just trying to be on the right side of the trade, and we don't want to get faked out of our position. That's why we, talk so much about risk management and keep our trades small in the pro channel. We're trying to make sure that we don't get liquidated or faked out of our position. We don't overtrade. We want to be making sensible things, reading charts as best we can, and setting ourselves up for success. And then we sit back and we wait. If we're wrong, we just deal with it as it comes. And if we're right, we have specific exits so that we can put that in our pocket. So really, really, really cool. We're getting there. So not only do we need to get here from a technical standpoint, we also need to get there from a shift standpoint. Like we need this point so that we can move forward into our next phase of Bitcoin. Where the bottom is established and we're starting to move sideways. There are a lot of rolling hills in the bottom of markets, but usually will pop up a bit. The majority of people out there are going to be missing this move. That's what's so cool, is that, I've done this for many years, and it's kind of been my mission in life to sort of kind of help the underdogs a little bit. I just don't think the people that really know how to do this, they've got their hedge funds, they've got their investment, stuff. They're all in good shape. It's the small guys that think that the markets are a casino and they make stupid mistakes, and they're the krill for the blue whale. All of us little guys that like to trade and mess around, we've got our $5,000 and big dreams, hoping to kind of get ourselves up to a better place. We're the ones that make the dumb mistakes, and all that money just flows into these big institutions. So it's my job to look for stuff like this and point it out. Hey guys, it's significantly changing momentum. Like things are changing. There's some opportunities here. Now, I can't give you financial advice because I don't have that licensing or anything, but I've done this for a while and I've done it successfully, and I could certainly point to things that you should seriously consider. And on my pro channel, I'm actually making these trades. Like, that I'm walking the walk, not just talking it. So David Ara, welcome again. Push the like, guys. Help the channel, please. Thank you. I appreciate that. I'm officially streaming. I think we're live on LinkedIn. I'll have to check after and see. If anybody makes a comment on LinkedIn or Twitch or anywhere else, I think it flows in. I think I've got this system working. But yeah, here we are. So I did this video yesterday and kind of tweeted out that 17.8 is our target. And there's multiple reasons. Not the least of which is that there's no resistance here. You can see how our most recent resistance was at 17.224. I guess I could zoom in a little more. This is our most recent resistance. And there's no resistance between this level and this level. So there's no reason we shouldn't, especially once we've crossed this level here, which we did yesterday. There's no reason we shouldn't attempt this level, because there's nothing in the way nothing stopping us. Does it have to? No. But is there a chance, probably above 50%, that we'll get there? Yeah, because there's nothing in our way right here. We moved so quickly that there were no levels of support or resistance created. It's actually probably worth me mentioning how do these support and resistance levels, like how do they happen? Well, traders create these order books. So people put in orders to buy and sell. And as markets are being pushed up, all the sell orders are being captured by people buying at market. And so the longer a price ranges in the same range, the more sell orders show up here, and the more buy orders show up down here. So if we're ranging in a range, this gets thicker and stronger and thicker and stronger, and this gets thicker and stronger all the way through until one side breaks. And whatever side breaks, it can break fast, like in this case, because it took so much money to muscle through all of those orders that not many people were putting sell orders in up in this range. They were putting them all down in where the action was. They were trying to capture these swings. So there were fewer orders on the books, and then we popped through. But we're up here now, and a lot of people are watching these levels, and they're putting sell orders. Oh, if only I'd have sold up here, this would have been perfect. So they've got all their sell orders all in a row up here, and then prices escape, and then they're like, oh, I should have done it back here. I'm going to put all my sell orders in here, and so you get all these orders in place. So when you go up fast and down fast, you open up the order book, and you loosen up all of the trades. But people are always, it's just human psychology. People are always looking at these points, and they're always adding more orders on either side, and they'll let them sit there. And so over time, you get buildups. So are people like, if only I could have bought right here? There's probably a ton of money all down in this range of people putting buy orders, and they're never going to fill. I mean, they may never fill. We could possibly never see these levels again. But there are people that think we're going to 12,000 and 10,000 too. So I don't know. I mean, people have their opinions. That's what a market is. It's a place where people put their money where their mouth is, where they think that something's going to go a certain way, and they put their money on there. Well, so anyway, these levels are very well defined, and when markets move quickly, there's a decent chance that the order book is fairly thin through this area, and the majority of resistance that we'll find is right up here, because there are probably people with large amounts of money that know that these are pivot points, and they want to sell as much as they can right here, and then they will push the market back down. But if they're reading this the way I'm reading it, and most likely the case, the people that can push prices down, they're going to be careful, and they'll probably push it down to this level here, probably around 17,250 or something like that. And if they do, and then they allow it to return, now we're really ready to rock and roll. So just tagging this prior swing high, which is our lower high that we're looking at, just tagging this is enough to send quite a signal to the market. So it could be fast-lived, and it's also there's even if the chance of getting there is greater than 50%, that does mean that there's a smaller chance, but still a significant chance. I mean, if it's 45% that we don't, it's still a huge chance, right? So we're just trying to play the odds and put ourselves in the right position. So we're not setting all of our sell orders and going all in on these pivot points. We're trying to be sensible and be smart. Okay, I saw your video, Calvin, offline. Left the chat on. Oh, show the people they can come to speak. Gotcha. Yeah, it's kind of hard. When I click end the stream, it kind of closes up everything. Otherwise, I'm just sitting here, and it'd be awkward. So if you chat, just hit me during the stream. All right, Explosive. Hi, I wanted to offer promotion of your channel viewers. Okay. You'll have to DM me on Twitter or something like that. All right. Okay. All right. I think I've caught up on chat. Those are the main things that we're looking at. We're here though. If I zoom out to the weekly chart, these cycles, these 4-year cycles, are quite defined, and we are watching the lead up to the next halving. These big red arrows are the halving events, and this is where our next expected one is. And when we get in where we've put enough time between the halving, usually there's kind of a percent of the way through the halving that we find our bottoms. And we've done it. Our timing is absolutely perfect. We are ready for something. So, yeah, see how there's a 50-week moving average. It's really high on this one. So we have a ways before that comes down. But you can see how when we exit the yellow zones on these weekly charts, like we're moving straight up into the halving. And that has happened many times. We exit the yellow zone and we're moving right up into the halving, and then we're preparing after the halving. We're in bull season. Like that's when things are really rocking and rolling. So right now we're not quite out of the yellow zone. So we're in this kind of before world, but this before section right here is where the market has bottomed. We're finding our footing. There's plenty of volatility, so there's a lot of trades to make some money in here. But eventually we will give ourselves enough time for markets to cool, and we'll be in great shape. So we're just waiting and watching, but we're closer to that sideways consolidation phase than we are away from it. And if you look at some of these other bottoms, when the bottom was in and the market knew it and we started marching up, things just get excited. People get excited. Our current market has a lot more going on, so we have some things to be careful of. There's still a chance that we could reject off of the bottoms of these, but timing wise, I mean, just looking at all of just holistically looking at the entire thing, we're looking at a decent shot at breaking out. So we're just taking it day by day and candle by candle. All right, that's pretty much everything I had prepared for today. So I'll probably wrap it up if there aren't any questions. But you know, it's worth. You know, we don't want to over leverage. We don't want to be, you know, we don't want to be dumb about our decision making. But you know, bottoms come once every 4 years, and this is a decent time to be checking, you know, positioning ourselves for the future. Okay, a couple of questions just came in, and we'll just hit whatever you guys want, and we'll just talk about anything. Oh, the other thing I was going to say is because the markets are moving okay today, we're still finding those little popcorns, those coins that just pop out of for no reason. AVAX is the winner today. Exited the red zone. Beautiful cross. Support off the 20 down here. Exited the red zone. Just decided today was the day, and it just pops up. So these are the coins that we're just waiting for these things to happen, and they're just going to happen all over, especially once Bitcoin gets going. Once the market matures, I think if we can establish a new high, or even if we just touch it, all we have to do is touch it, and then we come back down and find higher support and then try again. I mean, the alts will just go nuts. All right, let's hit this. Joel, welcome to chat. Is it possible for you to look at Decred and your thoughts? Sure, let's do it. You know what? Maybe I'll pull it up on Binance just so that sometimes XC Global doesn't have all the history. I'll just check and see. Yeah, they don't have very much. So let's look at Binance. So just looking at the overall, Decred has had a very happy bull market back in 2021. And then it's come down just like everything else. Come down pretty hard. Quite a move here. These levels here they take from yesterday's close, and this is double from yesterday's close. This is triple and quadruple. So that's what these lines are and their prices. So Decred is doing some good things. Step one is to get above the 20. We've allowed the 50 to come down really nice. We've established a pretty decent bottom. There is a potential that we're doing a descending triangle here, though. So that's something we've got to watch out for. We've got a high and then kind of a lower high. This didn't quite materialize, and we're still butting up against the same resistance. If this breaks, there's more downside for Decred for sure. But the fact that we are attempting to break the 50 is huge. And most recently, we're above the 20, which is good. If we kept rejecting off the 20 and then started getting down here, things could unravel pretty quick. But I think there's a lot of momentum in alts all the way across the board. So taking anything off, probably anything in this range, especially above the 20, you'd be pretty in a pretty good spot. I would just be careful that you don't put too large of a position in case this bottom does fall out, because you know the potential is there. So that's kind of how I would look at that one. Blue Sky says, hi Calvin, can we look at a chart, Matic, for example? How can we judge if a move will get rejected or past a resistance level? Well, let's look. Matic's one we're trading. Here it is. So how do we know whether it will? The chart generally gives us some clues. So right now, we have a decent amount of support down in this range here. And then what we're looking for, so what I like to do when I'm trading, I like to zoom out and I like to look at any major levels where we've had a lot of interaction. I think for Matic, I would probably point to this section here. It's kind of hard to read. This is definitely a point of support. that we were hitting way in the past, and we had lots of lower highs coming in, and once that support blew out, we just hit the fan. Like, this just got so ugly. And then how do you know whether it'll hold or not? You don't. But that's why just a couple of general principles that we try to stick to, and that is the more touches on a line, the weaker it gets. And whichever side has the stronger momentum usually wins out. So if we had a very slight, I'll just put a line on just so you can see. This is just hypothetical. It has nothing to do with what's on the chart. See if we had a slight inclining support coming up, and then we have a really steep declining resistance. It's usually the steeper is the one that wins out. So usually whichever side is losing momentum or gaining momentum faster, it usually has the strength to break out the other side. But these are still greater than 50% and less than 50% odds. Either side can break, and it depends on how the market, reacts to that. So if I'm looking at this chart, I zoom out and I see, okay, bears had an absolute heyday, and then the bears got wrecked by bulls. So the bulls kind of pulled it up, and the emotion here is that there's a lot of excitement and a lot of anticipation in the market because we've come so high up off of our lows. But we hit a pretty good buying climax. So this is our buying climax, and it went up so fast and down so fast that this has created a problem. And so we're oscillating, emotionally, we're oscillating back and forth between these things, and we're trying to find neutral ground. Well, neutral ground can come from the bottom. So our bottom has come up so much. There's no 3 points that I can even point to on the bottom of this. So the only support I can find is probably right here, because we have the most points. We've got this touch point, we've got a couple of touch points in here, we have one here, and then finally we have one here. So this is probably our most realistic bottom line support. Now what does the top line support look like? Well, we need 3 touch points. 1, 2, and then this would have been 3, but we broke out the top. So in this case, our bottom has held, our top is losing strength, and so the market is shifting to the upside. So this is one that I would be more interested in going long than short. Of course, the market can change, but that's why we're taking every single candle and adding data to our analysis every single day. So in this case, we would be looking for chances to long, and it also helps that we exited the yellow zone recently, where we found support off of our 20 right here. So we've got a couple of footholds that will give us strength heading up. When we get too far in one direction, we know a correction has to come, but the more lines that you can cross that are important, the more chances you have of finding support on the other side. And as long as your new low is higher than this low, you've got a momentum shift in your direction. And they say the trend is your friend, and that is true. We want to be looking for long-term trends and aligning ourselves with it. If you see a long-term trend that's weakening, you gotta start being ready emotionally to pivot. So hopefully that teaches you something about where my brain is on some of these. David put this one. What do you think? Fred? All right, hang on. I can't look at everything, but I'll do. I can look at that. I'm not sure what it is. Fred M1SL. Oh, I see. The money flow index. So M1 is all physical bills in existence. So this is the currency. This is US dollar. So all US currency that is in existence, M2 is the amplification of that through all the banking system. So the fractional reserve banking, you put in $1 and they lend out $10. And so that's what we're looking at here. And the market, we've added a lot of dollars, especially during the COVID situation. And with inflation and also a reduction of actual physical dollars, there is a trend coming back down. I do not have a Bitcoin versus M1, no. Well, I don't want to do that on the live stream because I'll just confuse myself. But yeah, so anyway, as less dollars are in the economy, it helps to, that would serve to actually strengthen the dollar. But yeah, it helps with inflation though, because this is a higher inflation. We've added so much currency to our thing. So if we reduce the amount of dollars, we're decreasing the amount of dollar inflation, but it also would strengthen the purchasing power of the dollar. Yeah. Anyway, good stuff. Yeah, every coin, I'm really watching carefully, watching for every little nuance, every little move. And I like to leave trends on the chart because if there are long-term chart trends that play out, I want to see where they interact. There can be moves that happen long time ago, like back in here, like this support that we had right in here, and we battled it. This was a year later that we were battling it, and we ultimately lost the battle against that and fell back down. So major lines will come back into play. And so that's kind of why I like to look at these. But to be honest, on Bitcoin, this line is probably not going to be touched ever again. Like this is probably one that we can remove because I don't see us just suddenly dropping to 13,000 tomorrow. I mean, if we get down there, we can put it back in, but we want to be looking at what's relevant. These levels are going to come back into play, and so we're leaving all of that on there. Really cool though, really cool that we've been watching these, and that we had this intersection here. Do you guys remember when we were looking at this? It was just so crazy to see all of these lines just lining up, and it just was this war zone. And then it popped out the top and cleared every line, and here we are. I just exploded out of that little pivot, out of this kind of center point. Just really neat how markets do this. This is why I'm such a nerd and I enjoy this stuff. I seriously look at this all day, and it is fun. But that is enough for me today. I am really glad you guys came to join me, and I'm gonna go ahead and end the stream here. But there are some great things ahead. We've got months ahead. If this is a long-term pivot, we have literally years of upside. And so we just want to be wise. We don't want to get greedy, but we want to move in smartly and position ourselves to do well over the next few years. And if we're wrong, we will find out, because markets tell us things. They tell us things before the news tells us things. We can see people making decisions before it's announced. Okay, I'll leave you there. Thanks for joining, you guys. We'll catch you next Wednesday. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.